5, 4, 3, 2, 1. Hey guys, how you doing? We've pulled together just a bit of a facilitated discussion with some people in the startup space to talk about stimulus package number 2. But at Stone and Chalk, Josh and myself are residents. We've been talking about this for a week or two, and our rationale was, look, if we've been talking about it, let's turn it into a bit more of a formal discussion. We've grabbed Stuart, a chartered accountant, a bit more of an expert in that space to talk us through what Stimulus 2 is looking like. And there's also been a lot of vigorous discussion online. Facebook's blowing up, LinkedIn's blowing up, Twitter's blowing up, and Stuart's been having some really great discussions and helping people understand these scenarios. So look, that's why today's happening. I'll just get everyone to introduce yourself. Josh, just give us a couple lines on about yourself so people have context.
Awesome. So my name's Josh. I'm the co-founder and CEO at MoneyLoop. We actually provide an interest-free, fee-free way for consumers to pay their insurance excess. Essentially, what we've seen so far is that this has had significant impacts to our business, and we'll get into that later.
Brilliant. Stuart, a little bit about yourself. You're our resident expert today.
Yeah, sure. I have the great, I guess, privilege of being a third generation accountant. We've got this firm called Full Stack Advisory. We're an accounting firm for tech and online businesses pursuing innovation. So that's what we love to do.
Brilliant. Brilliant. So there's been some really great discussion online on some forums and things. So I think now is a really good time. There's lots of information for people to digest. Now I do just want to set this up. This is a historic moment. This is something like, 1 in 120 year type event. It's bringing back themes in the media of World War I, the Spanish flu, depression, like people lining up for Centrelink and welfare and support. There's been massive stimulus measures by governments, but just, what we've seen here in Australia the last 6 months has been catastrophic. We've had droughts, bushfires, floods, and now a global pandemic. So, and it sounds like there's some underlying reasons why this stimulus is basically necessary. So what impacts are you seeing in your industry and business, Josh, with that startup, fintech, insurtech hat on?
So I think the biggest impacts we've seen at MoneyLoop is, because we lend money to consumers, it's definitely capacity and serviceability of customers. We've seen that consumers are struggling more and more to meet their repayments. While simultaneously, we're also seeing that in the insurance industry, they're getting pummeled constantly. And with a change in regulatory reforms coming through, we're seeing that they're trying to do what they can to help support Australians and support the everyday person, but they're getting a little bit left behind, but they're getting there. On a MoneyLoop perspective, we're getting customers who have already used us in the past, asking us whether they can use us again, but they need their terms changed because they understand that moving forward, they're going to struggle meeting the repayment terms that we would typically set for them. So this has forced us to change the way we actually help our customers and support them during this time, which obviously has impacts on how we make money and how our business grows and develops moving forward.
And also, just to frame it around stimulus package 2, sounds like there's some stuff there, because my understanding there's going to be challenges for all businesses around employees, and there might be some tools that Stuart can touch on around forecasting things, reporting back to investors or shareholders and things. Is there anything there at a top level? We can get into the detail later. Anything there at the top level that in that stimulus that will be applicable for you, or you're looking forward to exploring some more?
Yeah, so something we are looking forward to exploring is the government-backed small loans. So the government recently allocated $60 billion for small and medium enterprises to receive a loan from a financial institution. We're also really excited about the PAYG changes in the stimulus package 2 and around how it's been increased from 25 to 100. I think that's going to help us out a lot and enable us to get through this period of time, which is a little bit stressful, but I think the government at the moment is being really proactive around how they're trying to help small and medium enterprises.
Excellent. And we'll frame that as well. We've had stimulus package 1, we've had stimulus package 2, and there's a bit of I'm picking up a bit of a theme that they're monitoring it closely, and there's talk of potentially stimulus package 3. So it sounds like there is this monitoring and iterative approach to adjust as things further develop. Stuart, we'll cut to you. What concerns have you been seeing, and what themes from the industry or clients have been popping up for you the last potentially 6 months, but more importantly, the last since the start of this year, once Corona has really started to hit?
Yeah, so we see a lot of businesses hit across the board, across a whole bunch of different dimensions. Like to rattle a few. So we see startups holding back on major expenditure, so changing the lease or hiring new staff. That's not taking as much as it once was. Maybe because of a little bit of uncertainty around the runway. But also too, we also see investors retreating back from I guess more exciting, innovative investments. So we're seeing that that influx and the output of capital really slowing quite a bit in the common climate of bushfires and the coronavirus. So any welcome opportunities that the government has been putting forward, they're very welcome, particularly in this historic moment of time that we as accountants haven't really seen, at least in this generation. Cool.
I think that's a big one. This is the first time we may have seen that. There's lots of pardon me, people doing sort of flashbacks to and modelling, and particularly in the media, back to the World War I and the Great Depression type stuff. What are the top themes you're seeing in the accounting industry? Is it about we're scrambling now to do some forecasting and remodeling and looking what our runway might look like? And we will then step into more about stimulus too, but just curious about some of those themes. What are you seeing as people doing right now to sort of get ready or adjust or monitor?
Yeah, so there's definitely the cash flow forecasting element. We now have, compared to say World War I, we've now got AI assisted cash flow modeling software that can do this in real time. So we're really blessed in that respect. Like we have a software like Scenario, which is just come onto Product Hunt, and that's been developed recently in Sydney, and that's the founders there offering that platform for free for people to just monitor their runway, see where they've been performing traditionally in their cash flow. But also give, a little bit of extra dimensions around scenario planning, whether you hire this staff or downsize this staff, you'll be able to see where that impact has on your cash balance in the future. So that's really innovative technology that people should be jumping on board, at least right now.
Fantastic. And you did mention, so we had a quick phone chat before today. It sounds like the industry's being quite collaborative as well, through the CA and accountants working together to share knowledge and share learnings. Is that something that's common, or that's a bit special for now, seeing that level of collaboration?
Absolutely. Yeah. So we've seen Jason Andrew from Stark Making Numbers. He's produced a tax planning calculator. Don't quote me on that, but you can put in the figures for your business, and you can see the outcome for the stimulus there. So that's another great free tool that people are using. But as well as, you see a lot of collaboration in terms of just the information. There's a lot of fact checking, and it's coming out a lot faster than, say, what it once was, coming out, in the newspaper or, via printed letter. That's not happening anymore. It's coming out the day after. So the government made the announcement on Sunday. We came out on Monday. That's unheard of. So it's very responsive in terms of the information coming out.
I think that's a key theme too. We want really reliable, authoritative information. So I think government websites and things, and as you said, that speed of access to information is going to be key as well. Look, let's chunk into the body of this really. So this was sparked by some discussions of Josh and I, and we've since reached out to Stuart, and there's been a really great discussion on Sydney startups chunking out some of what stimulus package 2 looks like. What are the key takeouts, Stuart? Anything, is there a top 3, top 5? What are the key things that you're seeing? And I love that your post sort of set them out nice and clearly. So I'm happy to pass to you and hear what these key pieces are.
Okay, sure. So number one, the PAYG W holding credit, that's now been increased to effectively 100,000, starting from the March BAS. What that is it's they're taking the credit that you're paying on your PAYG withholding through your BAS, and they're applying automatic credits or payments based on what you've lodged from the March BAS to the June BAS. And this is a little bit different to what they announced in the first stimulus, because they've announced that the credit will be split across 2 different periods. So you get a credit for the period that you declare from January to March, and you also get another credit from the period that you declare from April to June. And it's basically a minimum of 10,000 to a maximum of 50K for each of those periods. So I think we gave a brief example on the Facebook post. So a business, say with 50K gross wages per month and 20K of PAYG withholding per month, they're doing quarterly BASs. In this example, they would get a $50,000 credit in their March BAS. In the June BAS, they would get a $25,000 credit. And in the September BAS, they would get a $25,000 credit as well. So that's that's pretty powerful if you're hiring staff. And there was also a bit of a fact checking as well. Like somebody asked if they could, did they have to have at least 10,000 or so in pay-as-you-go withholding? And the answer was no. You're going to get a 10K credit even if you're just hiring staff, and there's no pay-as-you-go withholding available. So that's stupendous, really. I guess there's a major hurdle though. You can't just manufacture a situation where you do have magically have payroll. You have to have already been on the payroll system since the 13th of March to qualify. So there's not a whole lot of tax planning there, other than say if you have existing staff, just make sure they're paid well up until June.
So there are some safety valves in there to stop people potentially being spammy or taking advantage of this untowardly. Yeah,
absolutely. Like there would be a few founders that they're not taking wages, and they might just be taking drawings out of the company or dividends. But yeah, it would have been nice to have been on the payroll system since that date, 13th of March. Because the government is obviously very aware of any tax manipulation type scenarios. So just be wary of that. And it's all automatic. You don't have to do anything special to activate this.
There's no special applications. You don't have to go and trigger anything, talk to a tax planner, and incur any other costs. These are automatically in place.
Essentially, you just got to make sure you're doing the payroll properly. There's a lot of new time founders who haven't necessarily entered the payroll system properly before. This is going to, for those people, I would definitely recommend running for an account or bookkeeper to make sure that your BASs are getting lodged properly. So that's number one. The other one is the increase in the instant asset write-off. This is, I guess, for startups that are spending large amounts on infrastructure or vehicles, because the threshold has been increased from 30,000 to 150,000. It's just an instant asset write-off. So you simply spend the amount in the year, essentially from now until the end of the year, and you'll get the whole amount deductible. Of course, this is only relevant if you're in a profitable scenario. There's other cool things here, like I guess extra support with the government. They want to help guarantee 50% of new debts. So this is for the startups that need extra unsecured loans to help prop up their cash balance. And the loan term could be up to 3 years. There's maximum loans of 250,000. There's no repayments required in the first 6 months. So that's pretty powerful. And you're going to see that, I guess, filter through into all of the third-party lenders that are out there. There's other cool things which aren't necessarily part of the stimulus but have been announced at the same time. Like with the ATO, they've offered deferred due dates for your payments through BASs and income tax and fringe benefit tax. So if you're unable to make, say, that BAS payment of, say, 20,000, you're allowed to defer it for quite a few months. I've heard up to 6 months with the ATO, and there's no interest, there's no penalties towards this as well, which is really powerful. There's also some businesses that would have paid some pay-as-you-go withholding installments for, say, in respect of the forward taxable outcome. those businesses can actually claim a refund on the instalments already paid. So that's very powerful. There's other things too, like the R&D tax incentives. You now have a extended due date to the 30th of September. Normally would be end of April. So that's quite a few extra months there to get your application together. And for people with huge amounts of staff, you also got no payroll tax in New South Wales from January onwards. So these are all great things at different levels of government to help support business.
Okay, yeah, I did want to ask, so we've got that federal level and that state level, so they're working quite well together because there's dual tools being rolled out here.
Absolutely, yeah. It's across the board. We don't expect any opposition from Labor either. They seem very supportive, and they just want to steamroll this through and support the Australian businesses and community.
Yeah, I saw Albo on the telly and been following him on Twitter. It sounds like there's bipartisan support. Now, Josh, how does this, with your scale up technology fintech hat on, how's this sounding for you? Is there some things that are standing out for you? And is there any bits and pieces you might like to have a chat with Stuart while we've got him here?
I think the biggest thing that interests us quite a lot is the PAYG stuff, and that's simply because we have a few employees and that tends to get quite expensive really quickly, as I'm sure Stu can appreciate. And I think from my perspective, I'm not quite sure how I would take advantage of that. And I think you've mentioned that it's automatic, but I don't know whether if I was to lodge it tomorrow, is it something that takes effect tomorrow? Is it when does it take effect? When should I actually take advantage of this? When should I start?
Sure. Okay, so let's say most startups would be on the quarterly system. So what you'll be doing is preparing your BAS for March if it's not already prepared already. It gets prepared at the end of March, so you could probably be preparing it next month. And you'll lodge it, I think it's after the 20th or so of April, and you'll get a credit there for the PAYG W withholding. They would normally feature on your BAS. So let's say if you had 20,000 worth of PAYG W withholding, you would just expect not to pay that. So in effect, it's just reducing your usual BAS bill.
Okay, so if I'm really on top of my accounting, which I have to say as a startup founder, I'm not. If I was to lodge my BAS statement on the 1st of March, would I be able to get my credits then? Or would it be better to wait till later in April?
Do you mean the 1st of April? You would just simply get your credits. So you could usually with if you're going through an accountant, you can lodge in May actually. So you would just simply pay whatever you had to in terms of the GST liability. Just pay that, but you wouldn't have anything else to pay with, say, the PAYG withholding. So let's say if you had 10K to pay in respect of your GST, simply pay that, and don't expect the government to chase you down on the PAYG withholding that you would normally have to pay.
Cool, that makes sense.
Yeah, okay. So previously you might have had to bill 10K for GST and 10K for PAYG withholding. That'll just cut that down to that, 10K for GST, and you'd keep that withholding.
Yeah, pretty much. Yeah.
Yeah, excellent.
So that's the first period. That's the March BAS. The June BAS is a bit more a bit different. They've phased it out so that let's say if we were to do the same thing again in the June BAS, you would get a 5K credit in that June BAS. So you still have 5K to pay in respect of PAYG withholding. You get another credit, 5K credit in the next BAS.
Okay. Does the credit roll over from March to the next BAS?
The credit, no, it's supposed to be fully expired. If you're on the quarterly system, you should be able to use it all.
Okay. Cool.
Yeah, and I get that some of this stuff could be a little bit more complicated too, so we may not be able to solve every scenario.
Like we were given the scenario of where someone didn't have enough PAYG withholding to cover the 10K. But what we've read from the recent release from Treasury is that they would still get a 10K credit, which could even result in a refund or payment up to that 10K amount. So that's that sounds a bit exciting.
Yeah. Okay. How long to have we got a good grasp on this? Or this will still take a few days for everybody to get their head around and digest, or maybe a couple of weeks to get their head around and digest. How's that looking like? Getting a clear understanding for more so business holders, because I know the tax and accountancy community is probably following this quite closely. But yeah, how's this looking for a understanding point of view?
Yeah, it's going to come down to an individual approach. We're just going to, this is usually part of the tax planning service that we provide. We would sit down every quarter with the business owners and just work out month by month where the cash is going, how much to expect in terms of wages and super and PAYG withholding. And we're going to see a lot of that, I guess, in the next, around April. We're getting a lot of queries, but we really need to apply, I guess, a really tailored approach for each business to give that insight.
And I'm sure there's a lot going on with business owners and founders as well. There's multiple things happening, so it might take them a little bit of time to digest that and reach out and find a trusted set of hands. Now, top level, what sort of time, what sort of time horizon should people be planning for? 3 or 6 months? How long will this go on, do we think? Or we just don't know?
Josh, you want to jump in?
Yeah, I think this is very finger in the air. I think when we consider the current Australian response to the coronavirus, and I'm not talking about the government response, I'm talking about how people are responding. I think the general community is being a bit haphazard about it. I think we aren't caring. And I think this is going to drag out this entire scenario longer than it needs to be. So I'm thinking longer than 6 months. If there aren't stricter lockdowns put in place, I feel like people.
Yeah. Okay. So we're talking directly there. Yeah, if people are still spreading, this is going to make this sort of financial duress continue for longer.
Yeah, that's what I would think.
Yeah. Okay. I think that's fair. And it does sound like there's a bit of a general just sort of survival mode, kind of hunker down, take a look at your forecasts as in your cash and review as many rules as you can and start to look at those numbers. And I've just got a sense that people are being conservative. We're being a little bit more conservative. I think we've, as a business, did a lot of capital investment last quarter last year. So now there's no further, things for us to buy or to write off. And we're just sort of staying lean. We've got remote working teams or adjusting the way we're working. But for us, taking that sort of survival approach, kind of get through this, use as much as, some of those tools or government stimuluses that's applicable, but yeah, get through this and then we can start to rebuild. And we're trying to innovate some new products and things, but whilst not trying to be predatory, we're trying to be opportunistic, but it's really that survival mode. And we're getting that back from clients as well. They're taking it's hard to get in touch with key stakeholders and things as they're going through leave and working from home and adjusting their IT and remote working situations. Now, are there any hazards, any watch outs for this stuff? I did see that there's something where we can pull stuff out of super. I think that's potentially up to the individual, but Stuart, any watch outs or hazards here? Is there a couple mistakes smaller teams could potentially make that might see them in a situation?
Sure. So yeah, there's that early access to super. So there's a lot of people that can misread that. Like we've had a few people running a company and they've asked whether they can withdraw super. This is not exactly for them. That early access to super is for sole traders and individuals. And even so, pulling funds out from your super fund, that's always a matter of handle with care, because there's a lot of non-compliance type rules around doing that. So you always have to be a bit more advised around whether you access that or not. And it's just, I guess, traps for startups generally is obviously don't get overcommitted. Anything that's going to really rock the boat in terms of your runway or ongoing commitments, like in terms of being able to deliver on existing contracts. If you're having to downsize on staff, then this is going to have impacts on that actual revenue stream. Because you may have commitments to actually execute that, but if you can't execute that, then it may require, say, a whole refund, and a lot of staff may not be entirely prepared for that type of outcome. So it's just being wary of any longer term contracts or commitments, and to try and minimize those wherever possible.
Stuart, while we're talking about staffing, so as a lot of our startups and our businesses, and you mentioned that we're looking to downsize staff to hold on to as much cash as we can, what are the implications for our staff? So if I have to let go of a staff member tomorrow due to the downturn in the economy as a direct result of the coronavirus, what can I do as a business owner to make sure that my staff member is looked after?
So it's there's two things. So communication. So making everybody aware of the situation, talking through the scenarios, any alternatives to downsizing, and if you're failing that, then we have to look at the legal side of things, where you would get, say, a good HR versed lawyer on board, and there's various rules around, say, Fair Work Australia or your particular contract, which would allow you to trigger an efficient and legal means of downsizing the staff. Yeah, but hashtag no legal, right? So no legal advice. So just be wary of that, and make sure you have the right people on board to advise you.
Okay. The reason I ask is because I saw that. So I've got a few casual staff members that work for me. I've seen that if I wanted to reduce my operating expenses, I could let them go. But I saw that if I do that, my gut feeling is that I'm putting them in a really bad position, or in a position that they're significantly worse off by doing. And as a founder, I don't particularly want to put my staff member or anyone in that type of position. That's just an ethos that my business has. What support has been offered by the government to ensure that my staff member isn't being completely let down?
Yeah, so I guess that's again, that early access to super, that may be an avenue for them, because some of the criteria involves like being unemployed or being made redundant or having your working hours reduced by more than 20%, and these may be the criteria that is satisfied for them to access their super. So you can see the government is trying to help employees of this in this situation. Yeah.
Okay. And my hunch is hashtag no legal. But just keeping an eye on the media, there's so much happening there. We're seeing lines around for people to try and get to Centrelink to talk to someone in person, because websites and things are crashing. So
yeah,
it sounds like the government is trying to, and I'm not speaking for anybody officially, but it sounds like there's measures there to try and increase payments and access to payments. But the hunch is it feels like it might take a little bit of time to actually digest this. We've got this huge incident, this huge white elephant, or this huge elephant. How we're going to eat it? So I got to break it into little bite-sized chunks and get through it and digest it. I think it is potentially, really, really nerve-wracking for founders. And I've been in some discussions on Twitter about people saying access to super is potentially not a bad thing. But if I'm jumping out of a plane, I'd rather have a parachute versus no parachute. So my hunch is that's potentially a good thing to get people through.
Yeah, I saw that the government has increased the New Start from the 27th of April by $550. I'm not 100% certain whether that's something that is something that will benefit my employees straight away if something was to happen. I think I just need a little bit more clarity around that before I can make a decision, because at the end of the day, as a founder, my concern is cash flow in the business, but I've also got to be concerned about my employees and where they are. So I want to hold on to them for as long as I can, but at the same stage, the longer I hold on to them, the longer, the worse the impact is on my cash flow. But I guess that comes down to we probably need to do some better modeling around our cash flow. So I should come talk to you, Stuart.
And we may not be able to answer that today. So today's a bit of a round table, bit of a discussion. Stuart offering some top tips. There's a lot of information there. It might take someone a day or two to really pour over and to get their own sense of where that sits for them and their business personally, and at which point they might be able to seek advice to clarify, help steer them. But yeah, we might be able to answer them all today, but really good point. And I don't want to speak on behalf of the government or what the government's doing around welfare and Centrelink and things, but I've just, we've all seen in the media it sounds like they're making measures to do some positive bits and pieces. Any other key bits we've sort of missed today, particularly Stuart with you as a bit of an expert? We sort of covered those key themes. Hopefully it hasn't been too top level. Hopefully we found some practical scenarios, but anything there you think we've missed, Stu?
Not necessarily. There was some founders, that they've incurred some interest or penalties, and I guess it's good to know that if you incurred them after 25th of January, that the ATO has actually applied leniency to just waive them off. So
okay.
The government is extending all favours here.
So it sounds like stimulus package 2 has been a net positive for everybody. And as I said, it sounds like the government's still watching and listening and learning. There's lots of misinformation out there on Twitter and stuff. So I love the idea of factual links and things. Is there anywhere people can go to find, high quality factual links? Is it the government websites, or is there somewhere to go to? Someone can find this stuff that's tip top and not prone to fake news?
It's generally going to come from, I guess, the Treasury website, or is it any other chartered accounting firm. We've got professional standards to maintain. We can't publish incorrect, false information. So either of the two would be a good source of reference, as opposed to, say, another post on social media.
Yeah. Okay. So yeah, Treasury website or your financial or tax agent.
Yeah, absolutely.
Is that the technical term, tax agent?
Tax agent, chartered accounting firm. I've always is a good start.
Fantastic. Well, that's sort of it, guys. So just wanted to come out and do something. Wanted to share something. Want to be proactive on that front foot. I know there's a lot going on, and it's also great to have something to focus on between us versus just that constant that stress. Now, Stuart, I did notice that you guys are doing some forecasting clinics and things. You want to just tell us about that? There's a bit of an offer you came up with.
Absolutely, yeah. So just to help founders manage the cash flow impact of the coronavirus, so we're running complimentary one-to-one cash flow and tax planning workshops, normally $300 value. And here we're going to just help you manage how to get the most out of the stimulus packages for your business, as well as construct a cash flow forecast just to help you manage your runway through the new economy, as well as some tax planning, and we'll even help you set up your business on Scenario. It's a great local bred cash flow forecasting software, so that's really good value. So if you want to secure a place, just contact us through our website and just quote COVID help for some next steps. Yeah.
Okay, great. We'll put that in text below, but it's always good to have that in a couple of places. People can get lost. Look, for us, we're trying to maintain business as usual. We've self-published our own working with COVID best practice for clients that if they need live streaming, we're best practice. We've got hand sanitizer or masks, gloves. We're maintaining distance at all time. Any venue we work with, we'll maintain that distance. And I just did want to touch on, don't want to be predatory, but if people need help with live streaming or any IR, investor relations or comms with stakeholders, customers, what have you, we've partnered with Stone and Chalk to offer locations in Sydney and Melbourne to do some live streaming for 1 hour. So if you want to get in touch about our live streaming package with Stone and Chalk, get in touch. It's half our usual price. So it's not really about making money. We want to be front foot and want to be helping doing things, partially because it helps keep everyone sort of positive and gives us something to focus on. Josh, any top tips, anything wrapping up from you?
I would say at the moment that if you've got an insurance claim that's directly related to the coronavirus, you should lodge it. The insurance industry is really taking a step forward and to help people get through these circumstances in such that they'll actually expedite that claim and help it get sorted faster than normal. So.
Fantastic. Look, and it can be overwhelming. So I'm just following the advice of the government, just staying at home, self-isolating, trying to stop this spread to reduce any further pressure on our health workers. I've got some mates in France. They're saying it's pretty horrible in France. Some mates in Italy. Italy's been doing webinars and things for kids from home for 3 or 4 weeks now on Zoom. So it sounds like that's working quite well for them. But just, we're just letting all our teams and staff and friends know, just saying, look, just stay home, take it easy. If anyone needs a call at any time with our mates in our network, we're happy to take a call with them. But also if you get if you're at home and you're a bit stuck working from home or isolated, get on some of the tools like a Zoom or a FaceTime, or just reach out to friends. You can go a bit stir crazy or get cabin fever. Maybe work out and exercise at home. And then also I do know, I'm not sure how this is impacting NDIS, but I do know at times there's some NDIS packages to help around with psychology and working through some of your mental health. If you get really stressed, reach out to Lifeline, guys. It can be a pretty horrible time, but try and stay calm. And if you do need help, put your hand up and reach out to some of those numbers and support structures there. But look, thanks guys for chatting today. Really appreciate being able to pull something together that's front foot and hopefully positive.